Good evening, everyone. The time is 5:30. We do have the presence of a quorum this evening, and this meeting has been duly called and posted in the time and manner required by law. We're going to have a report this evening on the district's financial accountability rating, or FIRST system. Mr. Dupree.
Thank you, Mr. Rice. Kelly Schlacks, our Director of Accounting, is going to present our annual FIRST report, which is a report that's filled with good news. Kelly?
Thank you. Good afternoon. I'm pleased to present to you the results of the district's Financial Integrity Rating System of Texas, or like we'd like to call it, the FIRST rating. The district received the first final rating from TEA on September 13th of this year, and the district is required to have a public meeting within 2 months of receipt of that rating. This public meeting satisfies that requirement. FIRST was developed by TEA due to a request from the 1999 legislature and was implemented in 2001. The purpose of the FIRST rating is to increase school district's performance, to measure the school district performance in managing its financial resources, and to hold the district accountable for its financial management practices. TEA wanted a system that was simple and easy to understand and used data that was available and applicable to all school districts. The rating would serve as a warning of potential financial problems and allows for transparency. Although the rating we're about to go over was issued by TEA in September of 2013, it's based on financial data from the district's fiscal year 2011-2012. There's always a one-year lag due to the timing of when districts report their financial data. We just finalized our fiscal year 12-13 financials, and we will be meeting with the audit committee next week. That annual report will be presented to the board in November, and upon approval, we would be submitting that to TEA in November. Other districts that have an August year-end would not report their results until January of 2014, so by the time all that data is collected by TEA and the FIRST ratings are calculated and released, it would be the summer of 14 before we receive the results for fiscal year 12-13. As a result, it's not as timely reporting as you might like, but in connection with doing our audit, we do review our current year results and review the questions and evaluate where we think we're going to be when we report for next year. There are 20 indicators covering topics including fiscal efficiencies, budgeting, personnel, and cash management. And there are 4 ratings that TEA can assign: superior achievement, above standard achievement, and substandard achievement. The rating is based on a numerical scoring of the 20 indicators, with the highest score being a 70. Superior achievement is assigned if you received a score between 64 and 70. And I'm pleased to report that FBISD received the highest rating of superior achievement. Of the 20 indicators, there are 6 critical indicators, and if you fail them, you will automatically receive a substandard achievement rating. These are the critical indicators, and I'll be going through those in more detail as we move through the report. And I'd kind of like to take a few minutes and go through all of those 20 indicators. I know it sounds like a lot, but I'll cover them by topic so that we can get through it a little faster. The first one is the timeliness of the reporting. The fiscal year 11-12 report was received by TEA within 180 days of the district's fiscal year end, and we answered yes to that. So yeses are always good. It was filed on November the 11th. And was that 11-12 report that we filed submitted through the TEA's PEAM system accurate? And the answer to that is yes. Sometimes we have rounding, but we always try to tie that back to our annual report, which the board approves. And the next, did the district receive an unqualified opinion and have no material weaknesses in internal controls and no material non-compliance? And the answer to those was yes. Those are critical indicators, and an answer of no for the unqualified opinion or the combination of material weaknesses and material noncompliance would have resulted in a substandard achievement. In addition, there was no conservator assigned to the district, and there were no disclosures in the annual report on default of debt. For cash and investment indicators, the district had a ratio of cash and investments to deferred revenue of greater than 1:1. In addition, cash and investments in the general fund were greater than 0 at year end, and investment earnings met or exceeded the 3-month Treasury bill rate. To give you an idea of where we stand with current rates, and the district is earning for pools compared to the 3-month Treasury, I've outlined that in this slide. And TA had changed that because rates have dropped so dramatically that they changed it to a 3-month Treasury. And although the rates aren't great, it's better than the 3-month Treasury. The next indicator is for tax collection. Is there a 3-year percent of total tax collections, which includes delinquent taxes, but not penalties and interest, greater than 98%? And we answered yes. The next indicator, if property taxes collected per penny for the debt service fund was $200,000 or greater, the answer is automatically yes. And our district tax effort per penny for debt service was $2,337,721. The next indicators test the district's financial stability. The unreserved fund balance exceeded reserved amounts, and unrestricted net assets were greater than 0. In addition, the aggregate expenditures and other uses were less than total revenues and fund balance. In addition, the amount of fund balance in the construction funds, or as we refer to them, capital project funds, exceeded 0. And the district fund balance did not decrease for in the past 2 years. The administrative cost ratio of 4.76% was well below the state minimum of 11.05. And this slide shows the history. We've been gradually decreasing over the last 10 years. Shows that we've become more efficient in servicing our campuses. The next indicator deals with staffing ratios. Was the ratio of students to teachers within the 13.5 to 22 to 1? Fort Bend student to teacher ratio was 17.35 to 1, and that ratio is an overall average of all classrooms. And then TA also reviews the ratio of students to total staff to see if it's in the range of 7 to 14. And the district student to total staff ratio was 8.73 to 1. That completes the 20 indicators which resulted in the district receiving a superior achievement rating. Here's the ratios for student to teacher. I would imagine that those will continue to go down as we keep adding teachers next year. So we should see those continue to improve. So we received a superior achievement, but there's some additional reporting requirements. It requires the district to disclose expense reimbursement to the superintendent. These reimbursements were for the previous superintendent and were recorded in the annual report for fiscal year 11-12. Next year's first rating would also disclose expense reimbursements for the previous superintendent as well as Mr. Dupree. The expense reimbursements for board members for fiscal year 11-12 are also disclosed. These expense reimbursements are primarily for the TASA-TASB conference in the fall of 2011 and the TASB conference in the summer of 2012. In addition, there's some additional disclosures. The superintendent did not receive payment for consulting or personal services in 11-12. This is fiscal year. And the superintendent or board members did not receive gifts in fiscal year 11-12. And the previous superintendent and board members did not enter into any business transactions with the superintendent. In addition to that, the district is required to report certain expenditures for financial solvency and answer some questions. The disclosure reports that the district did not draw down funds for short-term financing. In addition, the district did not have a general fund balance, less than 2% of total expenditures for certain functions. We did have to respond to yes for financial extingency, but this will be the last year that we have to answer yes to that question. Next year, we would report no. And the number of superintendents reflected reflects Dr. Jenny and Michael Mackay. Next year, we would also have to report Michael Mackay and Mr. Dupree. And we also had to report 2 CFOs for this past year. And that concludes the presentation. If any of you might have any questions.
Just a quick one. It's August 2011 through June 30th, 2012?
This would be, well, this is our fiscal year, which is July through June.
Okay. June 30th?
June 30th. Mm-hmm. For 11-12.
Ms. Schlax? Would you mind explaining the debt service slide, please?
Right. If you took, if you looked at our annual report and took the debt service revenue and divided that by the 30-cent tax rate, that would give you the revenue percent. That's it.
Ms. Schlax, can you, okay, I guess that's what Mr. Rosenthal just asked about the debt service, the tax effort per penny. Can you say that one more time, please?
So the the revenue recorded from the debt service fund as a result of the 30-cent assessment divided by that 30 cents. So it gives you a dollar amount per penny.
Per penny. Okay. Thank you. Any other questions or comments? Thank you very much, Ms. Schlax. We appreciate. Very nice report. 70 out of 70. That's hard to beat.
Motion to adjourn.
We have a motion to adjourn. We have a second. All in favor say aye.
Aye.
Meeting is adjourned. Thank you.